Hello, everyone. Thank you for joining us this morning. My name is Dave Lubnick. I'm joined by Anthony Hayes, and we are excited to bring to you the YCharts Fund Flow Review for January 2023. Just one housekeeping note to begin with. Please keep in mind that the content of this webinar is meant for educational purposes only and is not intended to be used as investment advice, nor is YCharts acting as an advising party regarding client funds in any way. Also, I'd like to point out that there will be a recording of this webinar, which will be emailed to everyone tomorrow, and it'll also be available through our YouTube channel, which you can visit and like and subscribe to. So with that, thank you all again for joining us. Let's kick it off here, Anthony, with an overview of what we're going to be talking about today.
Perfect, Dave. I appreciate it. So just to set the scene for what we'll be discussing over the next 15 or 20 minutes, want to start with, in January, we saw a strong jobs report. The U.S. economy added 517,000 jobs in January, which was more than double Wall Street expectations. And then on top of that, we saw the unemployment rate drop to 3.4, which is actually the lowest level we've seen since 1969. We also saw what some would call a confusing inflation report. The latest inflation numbers eased modestly compared with a year ago, but the monthly figures picked up back in January, kind of clouding the overall picture. Overall inflation cooled slightly in January with the annual rate hitting 6.4% in January, down slightly from 6.5% in December, and far lower than a peak of 9.1% that we saw last summer. But the January rate was quicker than the 6.2% expected by economists, again, kind of clouding that overall picture. And then we also saw the earnings season kick off. In January, 50% of companies in the S&P 500 reported earnings results for Q4 2022. Of these companies, 70% reported actual EPS above estimates. We saw interest rates, inflation, supply chain, and other factors continue to be ongoing issues for companies, but consumer spending last quarter was still strong, but some companies do see weaker demand moving forward. So that's the easy way to set the scene. And then after reviewing the fund flow trends, stay tuned at the end of the presentation where we will review where to find the fund flows reports in YCharts. We'll review the new YCharts mutual funds and ETF data pages. And then we'll also touch on a few exciting new features, including scenarios, report builder, and alerts.
Great, thank you, Anthony, for setting the stage there. So with that, let's dig in. Here we're looking at flows in January across the broad categories. So we've got 8 categories here. You'll notice the massive inflows here into fixed income, followed by money markets, and then pretty much everything was flat or slightly negative. A couple things to note here. We see almost 50 billion flowing into fixed income in January. We will dissect that in the next couple slides. But just one thing to note, that 50 billion into fixed income in January was on the heels of 265 billion out of fixed income in 2022. Is actually the largest the category with the most outflows in 2022. So that's interesting to see that reversal there. And there was 62 billion coming out of fixed income alone in the fourth quarter. So what we saw here in January certainly helps make up for a lot of that outflows from fixed income that we saw in the fourth quarter. Interesting to note as well, money markets continuing to see inflows as we saw throughout the fourth quarter as well. And equities, represented by that very small sliver of green, basically flat, meaning that we didn't really see much in the way of equities into in January. We didn't see much in December either. So folks without those, kind of reallocations into equities, basically it appears missed out perhaps on that 6% run up we saw in the S&P 500 in the month of January.
Yeah, and Dave, you mentioned kind of the reversal of trends that we saw in fixed income, massive outflows in 2022, and then close to 50 billion in inflows in January alone. And it seems like investors may be starting to find the asset class attractive again. given that yields have jumped up so much, typically translating to higher expected returns in fixed income. Maybe the traditional 60-40 portfolio could potentially fare better this year versus last. And then speaking of fixed income, we go a layer deeper here and we actually break down the flows into specific fixed income categories. And we continue to see investors favoring the intermediate and the longer parts of the curve, with flows to intermediate core and core plus totaling $20 billion in inflows in January alone, as indicated by the purple and orange bars on the left side of the slide. And then, transitioning over to the right, you saw the front end of the curve made up of ultra short, short duration, and bank loans. They were actually the only three categories that saw outflows in the month of January, totaling just over $9 billion. And it'll be interesting to see with all the cash on the sidelines. We mentioned the inflows to money markets in Q4 of 2022. Obviously, they continue to see inflows in January. If you see that jump in rates on the front end of the curve, that we saw to start 2023, if these asset classes potentially start to look more attractive as, a cash plus option for investors, maybe next month when we're reviewing February fund flows, we could see a reversal of this trend of outflows. It'll be interesting to see, Dave.
Yeah, definitely. And I always like to take this a step further. So right now we're looking at flows in fixed income across mutual funds and ETFs, but I do think that a lot of people appreciate that in YCharts, we break that down to the next layer, which in this slide is represented, again, looking at fixed income, but breaking it up by mutual funds and ETFs. And this to me is a really interesting slide. A lot of folks probably recall from prior webinars, as well as receiving our monthly fund flow reports in their inbox, that when you look at equities, traditionally we've seen a story play out over the last year or two where pretty much all the ETF categories for equities are in, and pretty much all the categories for mutual funds are out for equities. What we see in fixed income is interesting though. It's a bit more kind of consistent, I'd say, between the mutual funds and the ETFs. You see several mutual fund categories here with inflows in January, as well as seeing several ETF categories with inflows. And then you see the outflows kind of consistent across ultra short there for both mutual funds and ETFs. So what's the takeaway here? I think people are appreciating some active management here with those mutual funds in the fixed income space. Anthony, I know you spent several years selling in the fixed income space. What's your takeaway here?
Yeah, I think you highlighted it well. This slide, it is a bit more nuanced when it comes to fixed income as opposed to equities, because typically the active mutual fund managers do prefer to invest in asset classes where they could potentially add alpha. So you think of corporate bonds as opposed to treasuries. And that might be explaining, the inflows that we're seeing on this slide here. You see the inflows to core and core plus, which are typically made up of those more nuanced asset classes. And then you see the inflows to long and short government ETFs, which tend to be more passive investments. So this just kind of highlights the fact that active managers like to play in spaces where they can add alpha. And then if we transition away from fixed income and we move over to the equity side of the equation, this slide here shows the breakdown into the 9 equity style boxes. And per usual, if you've watched these in the past, we continue to see inflows into large blend. In January, we saw it to the tune of over 12 billion, which is interesting because it actually compares to only 8 billion of inflows for the entire quarter of last year. So if you caught the 2022 recap, you'll remember we saw 8 billion of inflows to large blend in the fourth quarter. We've actually already trumped that by about 50% in just the first month of 2023 alone. So, and then if we look back, again, Q4 2022 flows into equities, the general direction of inflows and outflows looks almost exactly the same, with the exception of a small modest reversal of fortunes for both mid-cap value and small blend, which in January, turned slightly positive compared with Q4 of last year. And then we also like to just make note, given the increase in the risk-free rate and the tendency to have a negative impact on future cash flows, we do continue to see massive outflows to large growth. In January alone, we're seeing over 10 billion flow out of the asset class, and that's indicated by the lighter baby blue bar on the left side of the slide.
Yeah, and it'll be interesting to see when we do the next webinar in a month from now, looking at February's flows, how these growth categories are affected. Obviously, you point out large cap growth with significant outflows, but it's consistent across mid cap and small cap as well. Just this morning, we saw in a video with some blowout earnings, stocks up 20%. I wonder if some moves like that in individual stocks might draw some of these investors back into the growth space over the next few weeks. So we'll see if that happens. The other thing to point out here with large blend, when you look at the inflows there, as you pointed out, you got to keep in mind a lot of that's just due to some of those large ETFs that are playing in that space, like VTI and SPY, and some of that might be due to retirement accounts, 401ks, just automatic contributions happening there, representing those inflows for large blend. Now, when we take these equities and we break them down one step further, separating out mutual funds and ETFs, again, very interesting slide here. And for some context, looking back at 2022 as a whole, every single style box, all 9 style boxes for ETFs for 2022 were positive. It was pretty interesting to think about. And only one mutual fund style box was positive in 2022, large blend, of course. So when you think about what we saw in 2022, and then you look at this slide, it's not to say that everything is drastically changed, but the question is, are we starting to see a little bit of a shift here? We start to see here, all right, there are, in this case, 3 mutual fund categories that had inflows, while we see 5 ETF categories with outflows, something we didn't see at all in 2022. Is this a little bit of a changing of the guard, a little bit of a shift of mentality, maybe like we talked about in fixed income? Here we see it with equities as well, perhaps, with that shift more towards active management via those mutual funds.
Yeah. You start to wonder, obviously the pendulum tends to swing one end to the other, and then it kind of settles in the middle. And this might be an example of advisors using some type of a core satellite approach, where they do have an allocation to the VTIs, the BOOs, the SPYs of the world, and then they could be using active managers in some of those smaller places like small value, small blend, where maybe they feel that meeting with the management companies could drive additional alpha, where maybe they're just not seeing that in the larger categories as well. And then here we go one more layer deeper, and we actually break down the flows into the specific sectors of the equity market. And given the headlines around tech layoffs, both in 2022 and already in 2023, and in some ways echoing the large growth outflows we touched on in the previous slides, it should come as no surprise that the technology sector on the far right side of your screen here led in outflows, with over 2.7 billion leaving that sector specifically. Joining technology in the significant outflows group, we also have healthcare, energy, and real estate, all again right there on the right side. On a brighter note, we did see large inflows into natural resources and industrials, as indicated by the purple and the orange bars on the left side of your screen. So there were some bright spots, and then a lot of what we're seeing on this screen just held true with topics and trends that we've touched on in previous conversations.
Thank you, Anthony, for that. Going to spend a few minutes here now as we conclude this webinar to show you a few things in YCharts, specifically where you can find those historical fund flow reports, Want to point out that it's not just fund flow reports that we produce in YCharts. We also produce a lot of other great content. And one of those pieces, just to point out, is our quarterly econ deck. A lot of folks appreciate all the econ data available in YCharts, and that quarterly deck has some great visuals in there that folks can leverage. We have some new pages in YCharts related to mutual funds and ETFs that really do a great job visualizing performance as well as flows for those spaces. And then a couple new tools via our report builder and our scenarios tool. So I'm going to hop here into YCharts, and I want to point out that under the support dropdown, there's several choices. A lot of people hopefully are leveraging the support that we offer, the dedicated account manager and so forth. But if you go right here to Fund Flow Report, this area right here is where you can, through the website, access any of the historical fund flow reports that we've created. You'll see here we have versions for the US as well as Canada. And then we have the Fund Flow Report, which highlights the categories with the most inflows and outflows, as well as the individual securities, as well as the strategy report, which looks at the total flows and then breaks them down by mutual funds and ETFs. So I'd encourage you to take a look at both of those. Again, the current report will typically hit your inbox as a client in the middle of the month, but this is a great place as you scroll down to access any historical reports if you want to start to uncover some trends. On the left side here is where you'll also find that econ summary deck. So like I mentioned, this is produced quarterly. It leverages the 300,000 plus economic indicators that we have in YCharts. And this is a great opportunity to digest some of those most popular indicators, look at what's going on there. And then keep in mind that you could also build those as views in YCharts, leverage them for some of your marketing materials and your conversations with advisors and high net worth individuals as well. In addition to those reports, under the data dropdown, we have a couple new tabs here, specifically the mutual funds and the ETFs under data here are brand new. The mutual fund tab here, focused just on mutual funds. You'll see here in the top left corner, drop down to toggle between the United States and Canada, options for equity as well as fixed income, and then just some different modules on the page here. So everything's green here, looking at year to date, which is nice to see. Looking at it here by styles, here by performance across different broad asset classes and individual tickers. And then this module right here, probably one of the most popular views within this page. This is looking at fund flows and performance across all the different categories. And I highly recommend within this module to, in the top right corner, click See All Categories, because what that's going to do is it's going to pop this out to be able to view all the categories. So now we're looking at all of the categories, interactive. You can sort on each column and you can view different time periods for flows as well as performance. So a great place to understand, all right, year to date, money markets have seen the most outflows followed by large growth. Flip it around the other way. Prime money market, core plus, core bond have seen the most inflows. And also think about that relative to performance here with these columns. And then note that all of these are interactive. So if you wanted to dig further into one of these categories, you can simply click that header there. For ETFs, it's going to be the same. So again, under the data dropdown, choosing ETFs now, same layout, just obviously applicable here to ETFs. Again, looking at performance, broad asset classes, the option to expand the categories for the flows and the performance there, and then continuing to scroll down, just some other great visuals. So this is a great feature, a lot of great reviews on this so far in the last month or so that it's been out. Beyond these data pages, a couple brand new features. They even still have the new icon next to them under this tools dropdown. Let's start off with the report builder. So this is a tool that we have just recently released last week that really enables the user to create any reports that they need to out of YCharts. So what that means is that you as the user can come in here and create your own PDF report. You can do this based on creating modules. You can do this with colors, logo, disclosure. You can incorporate your own proprietary materials, fact sheets, firm overview, bios, whatever it might be, so that YCharts can be your one-stop shop when it comes to everything else you've been using the tool for, but also everything related to PDF reports and outputs that you might be looking for. And then for those larger firms, we certainly have the ability for these to be locked down, compliance approved, and then the end users just simply access their reports and choose the portfolios or the securities that they want to use in those reports. Another powerful tool is going to be the scenarios tool. So that's under the tools dropdown under scenarios. This right here is going to be that kind of that hypo, that scenario generating tool that a lot of people have asked for over the years. You have the ability to open up saved scenarios through the top left corner, but within a new scenario, you choose your security, you choose your portfolio, your model, whatever it might be that you've created, you choose your dates, and then you're allowed to choose what do you want to compare it against. Maybe it's another scenario, maybe it's a benchmark, as well as then start to lay out your contributions, your withdrawals. We have a brand new enhancement that takes into account inflation, and then calculate that and visualize that on the screen here, looking at what that has done from a performance perspective, what it looks like with the contributions and withdrawals. And coming soon in the next few months, you'll be able to export this to a PDF as well. So wanted to highlight a couple new features. Keep in mind, YCharts is coming out with new functionality on a weekly basis. Always new functionality in YCharts. The combination, hopefully, with the fund flow information that Anthony and I covered earlier, as well as these new features, has been a good use of your time this morning. If there's any follow-up questions, please don't hesitate to reach out to us, reach out to your account manager, or just visit YCharts.com. So with that, I appreciate everybody's time. Thank you all for joining, and we look forward to seeing you next month when we will review February's flows. Thank you.